Okay, welcome in. Much love, Trav here. We are going to go over a lot in a short period of time. From the high time frame down to the low time frame, starting on the weekly, yearly, decadely for Dow Jones Industrial Average, and we're going to end on the 5-minute chart for Bitcoin. I'm going to quickly go over my equity for the month. So let's get into it. I have about 30 minutes, and we're going to make the most of it. So I was having a discussion with Pone Star Masan about macro and direction for the year. He thinks we might see lower this year. I'm arguing that the bottom for most assets was in June. Bitcoin went lower because of FTX and minor capitulation. ETH did not go lower. ETH bottomed in June, and we could expect that because peak CPI will mark a market bottom. We have peak CPI in the 1970s here. CPI peaked on October 66. Market rallied, and these are pretty big rallies, like 50% rallies. Market bottomed with another coincident CPI peak. It wasn't exact, but yeah, major rally. Inflation reared again, bottom, peak, bottom, peak. And I would argue that we're probably likely to see inflation come down. I don't know. I think it's unlikely we make a higher high. The reason being that Jerome Powell's policy is quite aggressive and feels like Volcker in the early 80s and not like the real lax policies of the 70s. There's no price controls trying to hold it, it's just raising rates. So, there's more data if we go back to the 50s and 40s and 30s, seeing that most of the time there's an inflation peak, it marks triggers a rally, either immediately or shortly after. This happened again in 1990. We had a peak inflation, bear market, rally as inflation came down. And then I argue that that's what we're seeing right now. What looks like some kind of a bottom, aligning with an inflation peak. And I think it's possible that some assets see new all-time highs in 2023. Okay, so that's a high time frame thesis. We'll talk about the other side of things, but we don't even have that far to go necessarily. It's a 20% rally in the market from March 20 to the peak here. We went up 125% on stocks. To me, it's not hard to imagine new all-time highs on certain assets in 2023. Might not happen as just an idea. Okay, keep that in mind. Now let's go to the 2-year. We're going to work our way down to the 5-minute. On the 2-year, the most liquidity is above the highs at $70,000. That said, this is an estimation, and I would bet there's basically no actual active shorts that were opened up here that have liquidation up here. However, there's probably would be a lot of forced liquidations as price comes up here and people short this. I think that's probably pretty useful. Okay, let's look. Supposedly, at least on the higher time frame, what we took at the bottom is like the biggest liquidation event ever, from 17,600 down to 15,400. And it makes sense. On the 1 year, we have not left that much behind here. There's so much more at 26,000. So why would we not go up to 26 and maybe work our way? Like maybe what we could see, there's a possibility, is some assets put in all-time highs this year. Bitcoin makes it back to $50,000 and liquidates all these shorts up here. Again, it's just a thesis. It's not, and there's other theses as well. So 6 months again points to higher prices. So I have a short. I'm probably going to pull it. Just focus only on longs. Now, the only thing that could tell me that I'm wrong, maybe, at least from the chart perspective, is a 3-month chart, where over the last 3 months, a lot of liquidity built under the lows. However, I don't think we're going to come back for this, and on a higher time frames, it's not that much. On the higher time frame, there's just as much over the highs right now as there are down here. And it's very hard for price to get down there because most of this rally was a combination of short covering and spot buying. There's not a huge amount of longs that opened on this move. So there's not a liquidation cascade that could get us back down here. If we get down here, a liquidation cascade could get us to 13,000. But getting down here is difficult. And possible argument for that happening would be that there's certain macro things that could happen. We go into recession. We have bad earnings. That's a possibility and something that needs to be considered. But so many roads are pointing to higher right now. On the 1 month, there's more liquidity below than above. It makes sense because we're at 1 month highs. But you can see we entered an area where there's liquidity right above. We've entered an area where there's locally not a lot of liquidity built up. It makes sense to range for a while to build up liquidity. So I'm interested in range trading for now with the bias to break out higher. So that's how I'm going to approach it as we move down. On the 7-day, first thing I notice is this yellow spot right at 21,750, right above these highs. That's an interesting short for me. That's where my short is, and I may consider leaving it. Let's take a closer look at that. Now, as we drop into the 12-hour, again, I'm interested in range trading with a bias to the upside, but I'll take longs and shorts. We see down below us a couple hot spots at 20,325, 20,575. Those would be interesting places to long towards a possibility of a breakout. Okay. So now we're going to go in, before we go into the chart, I'm just going to quickly go over my equity. It's been quite a bad month. Drawdown, it's not too bad. I've drawn down into a higher high. Worst month I've maybe ever had in terms of win percentage: 0 wins, 7 losses, 1 break even, 0% win percentage, $0 profit, negative 23,896. Real bad. But my unrealized NP&L is still at 37,875, or my why did I say NP&L? Net P&L. Okay. My port value 225, not too bad. It was 200 years ago, so I'm up. And this is with living off this. I have a burn rate of $3,000 to $4,000 a month. So I'm not too stressed out or worried about things, and I have plenty of runway, but I want to get a move on things so that I can do things to increase the quality of my life and get ahead on life. 5 trades, everything has been a short this month. I shorted that whole rally. Biggest trading mistake I probably ever made was this long that I closed. I had a $800,000, $900,000 long position. It was like 50, 60 Bitcoin. And I closed it for on New Year's. Both of these were longs for a $564 gain. If I had held it to current levels, it would have been a $300,000 win. But I didn't. And while I had previously talked about holding it towards 21,000 and targeting that, the reality is my TP was 17,200, which would have been about a $30,000 gain, $40,000 gain, which obviously would have made a difference in my month, but yeah, I wouldn't necessarily expect to have actually held that all the way. Okay, now let's go back to, I guess we can look at the macro chart a little bit here before we go into Bitcoin and show that we're definitely tightening. We have both a higher low and a lower high at the same time. So we have a lot of liquidity coming, and it'd be interesting to see which way we break out. I'm favoring breaking out to the upside, taking this high, and then once we're in this region, reevaluating, like maybe we get stopped in here. If we go from a fib retracement, which I don't necessarily love, but from top to bottom, it does put us in this region, taking this high. So that is something I'm paying attention to. Dollar has just continued to die since it lost this trend line that it had for almost a year. and that was a flip long signal, and still is. Like, we need to favor longs here. I think it's okay to trade shorts as well, but we need to favor longs. So the way I would favor longs is I would take more of them, and I would take them with larger size, and I would hold them for larger targets. So let us take a look at current price action. Now, if we look at the chart, on the 4-hour, we have these daily highs here. To me, this is the target. Intermediate target is up liquidating this high, and this high at 26,000. That's where I will target for my longs. And then I would also be interested after that in a push to 33, then a push to 42, and then finally a push to 48, 49. That's my bullish case. Bearish case is we make a lower low here and come back down to 15,000. It's definitely possible, but it's hard for me to imagine that it should happen because there's so much buying support in here. These are not liquidation levels. The liquidity is all the way down here. It's pretty safe and far away. We could get there, but it would take another large player to be liquidated, which I feel like that's probably over. It would take deteriorating macro conditions, like a higher CPI print is something that could happen. If CPI comes in higher than expected, that's something that could happen. But for now, like, my actual short targets are probably just at the bottom of the range, and my long targets are at 26,000. So let's drop down into the 1-hour. We're forming a range, and it makes sense that we would use this range to recharge. From my system is telling me that it makes sense to long under these lows here. We also see liquidation levels here. This should act as some kind of a support, maybe a magnet, but I have a stop for that. If we drop down into the gaps in the 5-minute, we see, I'm going to turn off the liquidation levels here, but we see that under these lows, there's some gaps in here, which should act as support. If not, this one might, and if not, we'd probably take this and go down to here, and I might try another long idea. So my short idea, I don't like it as much now after this took these. I still think I'll probably will run it, but I might revise it based on what I'm saying on the 12-hour. We have broken out of trend. It doesn't mean that we're going to go lower. I expect higher, but we've broken trend now and forming a range where we'll most likely we'll farm liquidity on both sides. So I like the idea of shorting sweeps to the highs, longing sweeps to the lows, seeing which way liquidity builds, and ultimately trying to build a position and break out higher. Another thing on my to-do list is to study breakout trades more, because I think taking a long right as we hit this first ladder at 22,000 might be wise. Longing into this because there's a good chance we get continuations up to 26, so that's something that I would consider. Yeah, I think most likely, I don't think we actually go lower. It's possible. And maybe it's something that I would evaluate, but there's nothing wrong with a 4R. Now, I think the way that I have this trade structured is above these highs, short in the daily fair value gap. In order for this trade to make sense, I need a somewhat tight stop. Like a short up here doesn't really make sense. So I think aiming just slightly higher could make sense as sort of a poke the gap. We have never poked this gap yet, so it's something that might act as resistance. I will note that this happened over a 3-day weekend, so tomorrow with institutions back at their desks, we could possibly see a breakout in trend either to the upside or downside. This week, I don't necessarily favor bullish continuation, even though I am eyeing 26,000, because I just think it would make more sense to range and to maybe gather some liquidity chop, we can look at the 2018 bottom, and the breakout from the bottom looked similar, but what happened next was price action that looked something like this before moving up higher. But we never came back and even touched any of the daily fair value gaps. So my short is above there, and I think it's possible we never go back there. I'm not saying it's necessarily likely, but it's a possibility I'm prepared for. So yeah, I like these. If this fails, then maybe along from here or here. I will say I'm not going to use predicted parallel channels or fibs anymore. I think they've just led me astray too many times. I don't really like them. I think waiting for a golden pocket retracement is ridiculous that we're going to go this low. It might happen. I just think it's super unlikely. And I don't want to miss a bullish continuation because I'm planning for that scenario. And the same thing for any of these parallel channels suggests we go way lower than I really think we do. It's possible that we take this range and go higher. So I do want to tighten up this short here. So let's go ahead and look at the lower time frame on HY block for some ideas of how to do this. Look at where the danger zone is and where we might want to be. So on the 7-day, we would want to enter at 21,700, which is within our stop. So we might want to aim a little bit higher. We'll compare Binance to Bybit. It would also be reasonable to not even short at all because of higher time frame issues. Bybit is saying that we've got liquidity. He's saying that 21.5 is a hot spot, 21.7, and 22 is ultimately where we have a void of short stops, where this is where I would want to put my stop somewhere between 22,000 and 22,350. So I might want to raise my entry to allow for that. Same thing we're seeing on the lower time frame. It's a lot more safe after 22. There's heat up to 21.7. So let us take this into account and say, let us put our entry at 21,700 and let us put our stop at 22,100, maybe something like this. And then aim for down here, which is not quite as good, but hang on, let's look. Maybe we can have a little bit of a tighter. I think if we just go 22,000, that might be okay. Which is we could do 1.5% stop. So I'm going to try this. I'm going to cancel the other short. I understand. I'm just going to manage my risk. I understand from a higher time frame perspective that maybe this isn't the best, but again, like I'm seeing nice ranging behavior, which I like to trade. And typically after these insane liquidity moves, price compresses into lower volatility periods because it needs to generate the liquidity. This huge move off the bottom, so much of this was from all this liquidity of shorts that had built up in this range. And yeah, in retrospect, it's kind of obvious, but yeah, I mean, it's sort of hilarious that actually the 4-year cycle called for a rally around. Actually, no, the rally happened much later. It happened in April. The dump happened in November. The bottom was much longer in 2018. Now, what I have circled here is here's a rally off the bottom where we seriously broke out, which is maybe what I would expect. What's interesting is yeah, we struggled under this for a little bit, but like all this liquidity fueled an insane rally higher. So it could happen quick. But after we broke out, we formed a range, and we never cut back into this gap. Never happened. However, okay, sorry, it happens in 2020, but in terms of the move out of the bottom, it didn't happen. Important to note that, yeah, it would make sense to take profits up there after you get a 3x, 4x on your money. Here, there was a decent short opportunity, and there's a couple decent shorts. So as we form a range, maybe it makes sense to try to take one of these, but also to long within the range, underneath a little bit of sweeps, but above this first red candle could make sense. I also want to point out that even if you missed the insane move, there was a lot of upside above. And then for me personally, I missed this March 2020. I didn't start buying seriously until around $12,000 in here, which is extremely late. We bought so far, but it was right before the really big move, so it ended up working out quite well for me at the time. Now, let's go back and structure our trade and call it a night. So, structuring our trade. Yeah, based on liquidity, just saying, let's try a little bit higher. I'm gonna try short. I'm gonna manage my risk and use a 1%. Here we go. Open short. So we're gonna risk 2,250 divided by a 0.015 stop times 50x leverage is 3,000. And one other thing that I want to point out right now is funding is positive now, which means more perp traders are long than short, which generally does favor shorts. It's not a huge thing, but it makes a small difference. Okay, so we're going to sell short with a stop loss. We're going to enter at 21,700, and our stop loss is going to be all the way up at 22,025, and then our take profit, we're going to aim for 20,200, something like that. So nothing too crazy. 4-1. Okay. And we'll see. Wouldn't be surprised to just lose this one, but I feel like it makes sense. The system calls for it. We're finally seeing some weakness. Like we have insane strength. These days, we're seeing not necessarily topping signs, but signs of consolidation before a possible pullback to sweep to push up higher, or prices in a range now. It's okay, I think, to look for longs and shorts locally. Yep. And pain that I missed this, but I survived, and we'll move on. We'll have another profitable month. Maybe not this month, but next month. Okay. Much love. Peace.